I have been investing since September 2019, so it's been almost 3.5 years since I started. However, I still consider myself a beginner because 3 years in investing world is basically nothing. But I did learn quite a few things during this time. So in this video, I want to tell you 17 different lessons I learned about investing as a complete newbie. So first lesson is that emotions do actually impact your investing decisions. For some weird reason, you always want to sell when it's low and buy when it's high because I don't know, our brain is wired some different ways. Although you should not do it based on emotions, especially when your portfolio starts to get a bit more significant, it starts to get a lot difficult to make those decisions and actually, you know what is rational, but seeing you losing your money in your portfolio does affect the way you think about it. Second is that tracking your investments is a complete mess. Yes, it's actually easy when you start. For example, I started on Revolut and I started only investing in stocks. So when everything was on Revolut and I had all the dashboard and I've seen all the stocks in one place, that was fine. But then you try another platform and then maybe another platform and then you get on a pension fund with your bank and then you have at the end of the day, you find yourself of 6-7 different platforms investing in all of them, and then you don't have a way to track your investments because now you keep forgetting how much you put in where. Basically, it's just a big mess. So you have to be very, very organized and to keep track on like a spreadsheet or write everything down or do something to track everything. Because if you don't, you won't actually know how much you earned from your investments, because not every actually platform tells you. There are different ways of measuring and calculating things, so you have to do it yourself. At least at this point, I haven't found any app or website that lets you do that quite easily. Third is that stocks are difficult to pick. When you get started, it seems like a no-brainer and like, oh, I like Apple, so I should invest in Apple. Oh, Tesla is kind of growing. Electric vehicles is the future, might buy Tesla. But then the more you get into the stocks, you actually understand that you need a bit more information about these companies. You need to start listening to their earning calls. You need to start understanding the business decisions that these companies make in order to make your investments. So at that point, it starts to get very difficult to choose which companies to invest, because even if you invest in companies like Tesla and Apple, which one do you invest in? Which one do you want to have a bigger impact on your portfolio? Should Apple be like 50% of your stock portfolio? Or maybe you should choose some like a Starbucks company. So allocation of funds between those companies in your stock portfolio starts to become way more difficult than you anticipated, and at least I anticipated when I started. Next one is to limit your stock picks to only 5 or 7 different companies. So as I mentioned, picking stocks is becoming a lot harder the more you kind of do it. But then for example, I was running into a problem that when I picked all of the stocks that I kind of knew, like all the tech stocks like Amazon, Starbucks, Adobe, Tesla, Apple, and so on, I started to look for other stocks to buy. And then I started buying companies that I didn't even know nothing about. And then at the end, I have like 20 different stocks. Half of these companies I don't really care for, I don't understand, I don't listen to their earnings call, I do nothing. So my investing it's like I'm kind of buying a lottery ticket at this point, because I'm not researching at all. But then the companies I am following, I'm not putting money towards them and then buying other random stocks. So in the end, I figured that the best way forward is to actually pick only 5 to 7 different companies, because that's the amount of companies I feel you are able to track and see how they progress. And there's no point in investing in a company that if you think Apple is going to succeed way better than company B, what's the point in investing in that company? So limit your stock picks, and this way your portfolio is going to be way better. The 5th lesson I learned is that I actually don't know much about investing. Even after 3.5 years, I mean, actually I was learning about investing like a year prior before I actually started investing. So it's been almost 4 years of constantly reading about investing, watching new videos, soaking in all the information on the internet out there. But what I realized is that the more you learn about investing, the less you actually know you understand. At first, when you just get started with investing, it seems like so easy. People are telling you, hey, S&P 500, just buy that and don't think about it. Hey, just pick 5-7 different companies and don't think about it. But the more you get into the whole investing world, the more complicated it becomes. And you just understand that you don't know much about investing. So the next lesson is that investing is very subjective. There are many different strategies out there. There are many different ways of investing. Even take a look at YouTube. There are a lot of people telling you a lot of different things about investing. And if you start watching these videos, you might be very confused about what to do, because one person is telling you A, another person is telling you a completely different thing. So it's difficult to wrap your head around. So what you have to understand is that investing is subjective. There are different ways of investing, different strategies. And first, you have to pick the type of investor that you are. So once you select the type of investor that you want to be or you are, then it becomes a bit easier, because you can only kind of gather knowledge in that particular area and exclude things. For example, for me, day trading is not relevant at all. So I don't even watch day trading videos, maybe for entertainment purposes, just to see what's out there. But for me, I'm not that type of investor, so I don't even consider learning about that stuff. So the next thing is that it's difficult to choose an investing platform. There are so many out there, and there are so many new ones even in the past couple of years, that in your head it kind of becomes very confusing as to which platform to choose to invest in. As I am interested in investing, I do actually try a lot of these platforms out just to see what they're all about. But when it comes to my own personal investing, the marketing that these companies do is actually very attractive. And then you start investing on one platform, but then you think, hey, might be another good platform. And then another platform comes along, and then you see some YouTube promotion, and you kind of get into the head. Basically, it doesn't really matter which platform you choose. Honestly, the better platform to choose from is the one that is already established, that it's a big brand, big company, it's safe. Because if you're a long-term investor like me, you want to make sure that that particular company actually exists in 10 to 20 years when you want to cash out or something like that. So I wouldn't recommend choosing some new companies, maybe putting a small portfolio aside for them. But generally speaking, you have to choose a bigger, better company, and even a bank that's been around for long and that you know that your money is going to be secure. So the next lesson is very interesting. Once you start to make few successful trades, let's say you bought a stock, it gone up in value, and then you sold, you start, and then you do it again, and maybe a third time as well, you start to build this confidence that you know something about investing. And my problem was that I actually tried with this confidence. I was like, oh, I can actually replicate that with a completely different asset or on a completely different platform. So it's a weird thing, but be careful with the confidence that grows, especially once you start sort of earning some from investing and making some successful trades. You start to become more confident, but you might actually slip. And it happened to me actually, because I figured, hey, I know something, then let me try this completely new investing thing, a completely new platform, not even related to stocks or anything, because I did some successful trades with stocks. So be careful on this front. Next lesson is that crypto is risky. And I mean, in hindsight, it might seem obvious, at least right now, crypto is down so much in the last year. It's basically at an all-time low at this point. But it did teach me a valuable lesson that it's not enough to just throw money at any asset or any crypto or just anything like that and expect it to grow. There are some ups and some downs, and you have to evaluate the risks properly without looking at the world and seeing all the hype. Hype is probably the craziest thing out there in terms of investing. So it can impact your portfolio a lot if you invest in hype and not the actual underlying asset or a company. And crypto did teach me that I need to be a bit more careful in the way I invest and set my strategy before everything else, instead of just trying to throw money at something and expect it to grow. And so another thing that I learned, maybe more specifically about myself, is that I love ETFs. So I did find that ETFs are one of the best ways to invest, because investing became a bit more I started with stocks, and then I started maybe with these kind of platforms we can kind of invest into real estate. Then I tried some exchange funds. I tried a bunch of other things like crypto and stuff. But I did find that investing into ETFs is one of kind of the safest way, and one of the easiest way, and one of the most diversified way to invest. And without me needing to worry about it, track everything, it simplified the process so much that it became one of my favorite ways to invest. And I think I'm gonna continue with that moving forward. So last year, my investing portfolio crossed a major milestone for me. It went over $10,000. For me, entering in this 5-figure category was amazing. But I did learn one crucial thing, is that the more your portfolio grows, the less risky you want to be. So it's a weird thing that when you start investing, when you start putting that extra $500 or $100, maybe even $1,000, if you lose it, probably not much is going to happen. You're going to be disappointed, yes, but it's not going to change your world. Now that my portfolio is getting into tens of thousands of dollars, losing it, you want to safeguard basically that money. So trying to put everything in crypto is no longer an option for you. So the more money you have, the more safer you want to be. At least that's what I personally kind of experienced. Next lesson is that investing does get boring. When I started, it was very exciting. Everything was new. I was reading about everything, and it's just the amount of knowledge out there is incredible, and everything is new to you. So there are so many platforms to try out, to do. Even just buying a stock was exciting when I started. But over time, investing is actually really boring, to be honest. Like, unless you do some day trading, or maybe you're very into crypto and you watch that every single day or track it. For those extreme cases, everything else in investing, it's boring. You decide on a few things, you make a few decisions, and then you just do that every single month. Like ETFs will probably is the best example here. You do your research, you decide which ETFs you want to buy, or like what kind of portfolio you want to have. You set an automatic payment every week or every month, and then you leave it like that. And after a year, you don't do anything different. After 2 years, you probably also don't do anything different. With stocks, there are a bit more action going on, but with everything else, it's boring. There is not much for you to do. So you enter in this plateau where you kind of feel kind of odd, because you want to do something, but the only way to grow your portfolio, to do anything, is to just accelerate time, I suppose. And if you can't, and of course you can't do that, so you just sit there and wait. And the next lesson is kind of similar to the previous one. So once it gets boring, you actually try to chase some new thing in investing. You always want to be on top of things, and then you hear about this upcoming company, upcoming electric vehicle company, a new crypto coin, or it just, for some reason, your mind wants something to be done. You feel like you have this energy, power to do something with investing, and you want to try and chase that new thing. Usually that thing is very bad for you and you're gonna lose money, so it's not worth it. But I needed to learn to actually stop myself from doing that and just trusting the strategy that I set and just leaving it be. Another interesting lesson that I learned is that whenever you make a decision in investing world, you never know if it's a right decision. So it's kind of weird, but let's say you found a company, you kind of researched it, and you see kind of a good projection for that company. You're like, okay, I'm gonna invest, and then you decide to invest. You invest that money, and then the next day you actually start to doubt yourself. Is it that really a good thing that I did? Should I maybe just sell it? And was my research correct? Do I know? It's weird, but you start to doubt yourself with every single investment decision you make. And that's especially true once you learn more about investing. Then you understand that you don't know much about investing, and then you start doubting yourself more and more with each and every strategy that you figure out or decision you want to make. You probably heard this next lesson, and that is that consistency is key in the investing world. And I personally learned that myself, because for me, it's a bit crazy to think that my portfolio is over $10,000 at this point. But when I started with $300. And then I didn't invest for half a year. Then I put another $50, and then maybe $100 there and 50 there. And it's crazy just how consistently investing little by little, your portfolio actually grows a lot in just a few years' time. It's very difficult to see that in the future. Although, I mean, you can calculate that on paper. Like, oh, okay, if I invest $100 per month, that's $1,200 per year. And then in 3 years, I'm gonna have probably like $4,000 like as my total portfolio. You can actually figure out that rationally, but it's way different when you see that happening to you. So for me, when I actually saw what consistency does to my portfolio, I'm way more on board with this particular lesson, and now I'm way more comfortable to be consistent for the next 5 to 10 years. Next lesson is that you will make bad trades and a lot of mistakes when starting out in investing. This is kind of inevitable. It's not going to be like, oh, you only invest here and you only pick the winning stocks, you only pick the winning exchange ETFs and so on. No, you are going to make mistakes, and you have to admit that to yourself. For me, when I started few successful investing trades, I kind of had this mindset, I'm actually smarter than everyone else. I'm only gonna invest in these specific companies and they're gonna grow and I'm gonna be rich and whatever. There is this little like voice in your head which kind of tells you those things, especially after you sort of begin to have some success in investing. But you are gonna make mistakes. And I did make quite a lot of mistakes along the way. So the lesson here is to start with a low budget, because when you make mistakes, when you only have like $500, $600, let's say you invest in crypto or a company and it goes down like 80%, it's not gonna ruin your life, but you will learn a lot of valuable mistakes. So even if you have a lot of money sitting right now, don't start with all of that pool of money. Like, let's say you have like $10,000 and you wanna go and buy stocks with all the $10,000. It's probably a mistake. If you haven't done any type of investing, I suggest you take that $500 and start investing in a couple of stocks. The next month, take another $500, invest to other few stocks, and sort of lean into it easily, because there is a high probability that you might lose all of your money instantly if you just dump it all at once. Next lesson for me was that I don't have to be afraid to experiment with different investing strategies and tactics, especially in the beginning. So once you kind of start investing, you probably will start with just stocks or ETFs, but don't be afraid to try maybe even some day trading, maybe go into crypto, maybe you learn more about different ways to invest in stocks, maybe go for dividend stock investing. So there are a lot of different strategies and ways to invest, and as you don't know what type of investor you are, don't be afraid to experiment a little and see what is happening with each and every single one of them. For example, you might want to get $500 and maybe try day trading, maybe to see if that's for you. Of course, before doing some like learning and research before that. No, don't just jump into something without knowing nothing. You'll probably lose 100% of your money instantly. But this will let you figure out sort of what ways you want to invest, and you probably want to find this out as soon as possible, because in investing world, consistency and long-term is the way people will earn money. You're not going to earn money in 6 months or a year. You can actually build a significant portfolio in like 5, 7, 10, 20 years time. So as soon as you find that winning kind of strategy of your own, the better chances of you implementing it straight away are, which means if you find something in just a couple of months and start doing that for 10 years, you're gonna be very successful. So now that you know all of these lessons that I learned, check out this video where I showcase my best investments that I ever made. But that's it from me. Ciao.